Joining me now with more is Anthony Scaramucci, founder and managing partner at SkyBridge. Anthony, welcome.
Good to be here. Good morning.
It's great to have you on the show this morning. And as we are coming off back-to-back weekly gains for the S&P 500, how does the market look to you?
Well, I mean, we're probably overdue for a correction. I mean, we haven't had a correction. I think it's just over 20 weeks now, a significant correction. And so it wouldn't surprise me if the market corrected a little. But having said that, we're very bullish on this year. Our year-end targets are plus 15 for the S&P 500. Obviously, we have a very large crypto position, which we're optimistic about as well. And even though the Fed is signaling that they're not going to cut rates, we do believe you'll get at least 2 rate cuts this year, possibly 3. And so there's reason to believe that the market will maintain its buoyancy. Now, of course, we've had this AI scare, which I think will be short-lived.
I do want to talk more about the optimism that you see, plus 15% on the S&P 500, a double-digit gain, Anthony. That definitely is optimistic and does join other optimists, I think, on Wall Street in terms of the view. Now, when you look at rate cuts, you anticipate 2 this year, but what else is behind the positive momentum that you see on the year for the market?
Well, I mean, again, it may or may not happen, but I don't really think it matters that much. But if you get a tax cut, President Trump is talking about taking corporate tax rates from 21 to 15. That 6% doesn't sound like a lot until you apply it to earnings in the S&P 500. It could be as much as a 15 to 18% improvement in earnings. And so if you have a combination of a tax cut, the president's also talking about a reinstallation of the state and local income tax deductions for the blue states. And so that would be a very powerful consumption-based tonic for the markets. And so what would offset that, of course, people would obviously be worried about the deficit, but I think there'll be a combination of things. Ultimately, when you look at the president's tariff proposals, you'd have to think of those as consumption tax, even though he says that the countries are paying them. What actually happens is the consumers pay them at the port as those goods come in, or the manufacturers pay them at the port. So you could see a corporate income tax reduction, slight consumption tax with the tariffs, and that blends out to a very nice earnings story for the S&P this year.
And so speaking of earnings, Anthony, of course, we are underway in this corporate reporting season for the fourth quarter results. And this week we'll hear from 4 of the 7 magnificent 7 companies. They make up a large portion of the market: Meta, Microsoft, Tesla, Apple. What do you need to hear from these companies this week?
Well, listen, the market likes rate of change growth, as we both know. The market likes, you can have a slowdown in this quarter with great foreseeability for the next several quarters. So I think those companies, though, have very big moats around their businesses. I think the idea that they were going to be potentially broken up due to their size and scale and their relative market cap weighting in the S&P 500, I think those concerns are over. It seems like the president and his team have gotten closer to the founders of those companies, frankly. And so I think we have reason to believe those companies stay intact. They maintain their aggressive earnings and share repurchase programs. And I think it's a clear, as they say in the Navy, they say cavu, the ceiling and visibility is unlimited. And it feels that way for the market. Now, that doesn't mean that we won't have corrections, which are natural. Because when things are priced like this, you could have a setback or a fear, like we experienced over the weekend with the introduction of this Chinese AI product. But long term, over the next 50 weeks, I think the markets are going to be in very good shape. We're long the markets, we're long crypto, and I think we have reason to be optimistic. It's not to say that things will be perfect, but I think it'll work out well for 2025.
Anthony, to that end, let's dive a little bit deeper into crypto. You've mentioned several times here that you are bullish on this space. What's behind that?
Well, basically, there's been a relaxation of the regulatory grind for 4 years and still for reasons I don't fully understand, the Biden administration took a position that they wanted to be anti-crypto regulation. They wanted to slow down the Bitcoin ETF. Frankly, as we're discovering from documents that are being released, that they literally slowed down the banking accounts of crypto-related companies in something called Operation Choke Point 2.0. I think President Trump is guiding people. Presumptive Commissioner Atkins from the SEC is guiding people that this sort of stuff is going to end. Scott Bessent, who will be the Secretary of the Treasury, is pro-crypto. And I think you're going to have a regulatory environment that favors long-term growth in the cryptocurrency markets. There are some speculation about the United States adding Bitcoin to its strategic reserve. I do think that is likely. And so for that combination of those things, we have a $200,000 price target on Bitcoin this year.
Wow. So a doubling of where Bitcoin is now, certainly that would be a growth sector, Anthony, based on your projections. For investors watching, how should they compare investing in the traditional stock market versus the cryptocurrency market?
Well, I would tell investors, to try to stay with things like Bitcoin, Ethereum, Solana. Some of the smaller ones like Avalanche are also good, but for me, investors listening to your program, I would really just stay with Bitcoin. And I would say to those investors that this is an emerging technology that should trade to the market capitalization of gold over the next 10 years. And so Bitcoin has sort of a $2 trillion market cap. Gold has an $18 trillion market cap. And as the younger people start to age into their mid-40s, I think they'll accept this digital asset as a store of value. And so as that happens, we see Bitcoin trending, frankly, to $500 to $1 million per token. Won't happen overnight, but this is something that we've seen in things like NVIDIA or Apple. As things get adopted, they scale very quickly, and I think it's important for people to own, even if it's just a small amount of Bitcoin, to have it in their portfolios.
Anthony Scaramucci, founder and managing partner at SkyBridge. Anthony, thank you.
Good to be on with you. Thank you.